What is up, everyone? Thanks for tuning in. In this video, we are going to be taking a look at BAN USD, BAN protocol, and this is one of the coins I have been trading more recently since the bounce back, since the September sell-off, and I see that this coin, from my observation, has been coming back quite nicely and a little more quickly, in my opinion, than some of the other coins. Now, before we begin today, please do see my disclaimer below, as I am not a financial advisor. This is not financial advice, and I'm sharing purely my speculations and opinions. You should always do your own due diligence before trading and investing in this market, as it is extremely risky. And if you guys, while you guys are down there, if you guys do want to support me, you guys can use one of my referral links below to sign up for one of the following exchanges, and I will also earn a bonus when you do get yours. So thank you for supporting me. If you guys have not already made an account with one of those three and would like to, now let's get right into it. So for BAN, we are seeing quite a bit of a bounce back, and what's evident to me for this bounce back was BAN has actually closed above the daily 21 moving average, which is the blue line, and now it's retesting it because it got rejected at one of the higher moving averages that's above the current price action. So let's see what we're talking about here. So yesterday we have actually gone quite a bit up to about 7.5 USD, and we have gotten rejected at about the 12-hour 200 moving average, and that has brought us back down to about the 6-hour moving average, the 6-hour 21 moving average. Okay, so I have had the confirmation here. The first confirmation here is that we actually closed above the 12-hour, the daily 21 moving average, which we have not done since the sell-off. So you want to ask yourself, since the downtrend, what will break this downtrend? Well, it has not closed above the daily moving average. It has been pretty much below it for the past, since September 3rd. And we have recently just got back on top of it and closed on top of it on October 9th. So that's a good sign. That's a confirmation that this is turning around. Now, let's see if we can look for any other confirmations that this market's turning around for BAN. So we have not closed on top of the 12-hour 50 moving average, which is the white line here. So that is another confirmation that we may be turning around. And we got rejected at the 12-hour 200 moving average, which is the orange line. Now, yesterday, what could have given a hint that this market could have pulled back was on the 4-hour chart. You can see that there is some bearish divergence on the RSI here. What I'm talking about is you see a high. So this was the high, and the next high, which is this green candle right here, which is the higher high, but it does not make a higher high on the RSI, and that is your bearish divergence. And after that, there was the next high, which was this green candle right here, which in my opinion was a bull trap because it was an engulfing green candle, kind of giving me a signal that it might have just brushed off the bearish divergence right here, came right back up, and I thought we were going to continue higher. So that could have been a bull trap, but that was a double bearish divergence, and now and since then we have headed down. We have basically are being supported by the 6-hour 21 moving average. Okay, so let's see if this important support holds, because if not, we're gonna head lower to the other moving averages that are below us right now. But right now it seems like we are holding pretty nicely, and we've got about 2 hours to go, and we can see how much this will bounce back and if it will take us to another leg up. Now, if this price action does take us to another leg up, the next resistance would be the yellow line right here, which is the 0.618 fib level, which we have not been able to close above on the 12-hour. We have kind of closed above it on the 6-hour, but we just went right back down. So that was not really, we didn't establish ourselves above this fib level right here. Now let's just say that we have, that we do get above this Fibonacci level. We will be looking at the 12-hour 200 moving average right here, which would be currently it's about 7.55 USD. That will be the next level of resistance. And I see that the price action has tried to break it twice already. So let's see if the third time is a charm. But that will be the next level of resistance we are looking at. Now looking at the RSI, I see that on the 4-hour, it may be telling us that we could be going right back up, since we had the pullback from the bearish divergence. Let's see if that plays true. But the bullish case scenario here is that we actually establish ourselves, get a close on the 4-hour, a solid close above this Fibonacci retracement level, get a more solid close on top of this fib level right here, and then eventually closing above this 200 moving average on the 12-hour. Now, what is the bearish case scenario? So on the bearish case scenario, we break back down, but get a close below this daily 21 moving average. That's a bad sign for me, because that would basically put us back into this downtrend after we broke back above this to signal a reversal. But if we break back down here, that's a bad sign for me. So those are the two case scenarios, in my opinion. I hope you guys have found this helpful, and thank you very much for watching. Please do let me know your ideas, agree, disagree, in the comment section below. I will see you guys next time.